Hey Matt, how are you? How did you like that little countdown clock? Nice little addition.
That's pretty cool. Yeah.
What where are you at today on vacation?
Topsail Island, North Carolina.
I love it. Have you seen any sharks out there yet?
No, there's I think we're kind of close to the end of the island, so I think it's kind of rough. I think the way it's been real kind of windy and choppy, but there's an inlet that comes into the waterway, and that I think it just makes it too rough for them to swim around. But
Right
I'm sure
on.
they're not far away though.
Well, we are. It's a great view. It looks awesome. I like the blue chair behind you, blue ocean, just like MX's blue ocean in front of us, man. Right.
That's
So
right.
we're going to wait a few minutes after that countdown clock went, which brought a lot of people in, and we're going to kick her off at 12 o'clock, like we promised, and do what we say we're going to do.
Good.
Yeah. How we doing, Nick, over there on people in? 25 in so far, on our way to 2,500. Let's see what we got.
There's 25 more informed people right there than there
Well,
was.
it's funny. The engagement rate has been really good. I mean, a lot of the people that view afterwards, pretty amazing, our click rates. So we're going to get going here right when we hit 12 o'clock, and we're going to start talking about lumber. A lot to talk about. Crazy market. Lots of volatility, but that creates a lot of news, creates a lot of conversation. That's why we have the show to talk about this.
Lots of
All right,
opportunities.
let's get there. 11:59, almost there. Let me know where everybody's from. Sean Stevens, howdy from Tulsa, Oklahoma. Hey, Sean, glad to have you on. Appreciate it. Remember, what we want to make is Chris Durr, hopefully I'm saying that right. Welcome from Hong Kong. What we want to do, and Matt and I were talking about this the other day, is let's make this really interactive, where we want to do it a half an hour, but we want to make sure we're answering your questions. And if we don't know the answer, you can be rest assured I will make one up.
Yeah, that's exactly what I was going to say. I'll make one up.
So
It won't take long either.
All right, it's 12 o'clock. Welcome to the MX Broadcasting Network. This is crazy, but this is episode 15. 15th episode. It started out as a test. Now it's doing really good. And here's one of the interesting things. And I saw this on LinkedIn. Some people put up things, come join our show, and you have to have a sign on because you have to be a member to do it, right? We don't believe in being a member. This fraternity lets everybody in, and we want to give the information to everybody because social media is now allowing everybody in the supply chain to control the narrative, whereas before it was controlled a little bit more heavily handed by certain other people. So we're streaming live on episode 15, Lunch with Lumbermen, on our MX YouTube channel, on the Lumber channel, and on our MX LinkedIn channel. So go down in your Hooter Thought machine and type up some introductions where you're from. If you are on YouTube, hit the subscribe button. Go down to your little whirly bob on the bottom and click on it. We want you to be a subscriber on both our channels. All right, Matt. So let's chat a little bit here. Oh, two new things. Our new CTO, John Mancine, started today. Unbelievable, huge for MX as we build our tech stack. Also, our new board of directors, Stephen Voorhees, joined the MX team. If you don't know who Stephen is, also look him up and check it out. So I want to talk to you a little bit about what I streamed on LinkedIn this morning walking in, because woke up in the middle of the night thinking about it. We had a pole barn builder in Illinois buy a truckload of 2x4 16s. Usually bought spruce, but he said, you know what, I can use pine, saved $10,000 in a truck. He came back yesterday, bought a 2x6 16, saved $10,000. I mean, that's the kind of stuff that makes me wake up in the middle of the night and sit up and go, shoot, I can't sleep when I think about this. Today, another person on the platform bought a truckload of 2x4 16-foot Euro 16s into a location, I won't say where, and I said, hey, we have that on the platform. Let me show you how we can do it better. He went on 10 minutes after he bought it from his other people and bought it for $50 a thousand cheaper. That's almost $1,350 for one truck. That just is tipping on the iceberg. And I think, Matt, you and I talked about it. Like, I think it's just getting people to learn technology and knowing how to bid and do stuff to really realize the value that they can unlock on this valuable platform.
Yeah, and I think another thing, I asked you this yesterday, what percentage of the transactions are you personally involved in? You said it's like 50%, but for you guys that are new to this platform, having Ash go and work on your behalf is like having a private broker. We were talking about the other day how easy it is to trade lumber when you don't have to make any money on it, but all we're trying to do is just help you get matched up with a new supplier or a new customer that you hadn't thought of before, or you may never. You'd never even think about they could like you said, going from Oklahoma, from New Jersey back to Oklahoma. Just you'd never think about that until you just present it. It just pops up as an opportunity for you. But
yeah, it's crazy. It's part of a digital platform, and as John came in, our CTO, and we're talking about how incredible these matches are in our front matching engine, what it's going to look like. This is going to be the gamification of things, right? It's going to show how you can have access to everybody at one click of the button.
So you mentioned, I was going to say one more thing, Ashley.
Yeah.
You mentioned we try to get some a little more interactive conversation go between you guys. If you guys are uncertain about, like one guy asked me about how to make a counter and how deep a counter you make. I don't know what the limits are of what we can say and what we can't say, but we're here to help you strategize on your inventory management as well as just you're not just picking off one truck here and there, but some bigger plans, bigger than that. So just if you anything that you think is a question that revolves around the buying of lumber, just ask us about it, and we'll just make sure we don't step up into deep water.
No, appreciate that, Matt. So let's talk a little bit about lumber now. What a lot of people are here for. So when you sum it up. Greed and fear move markets, supply and demand move markets. We are off almost 70% in 8 weeks. I mean, 70%. And I'll arguably say everybody was looking for bounces the whole way down. The takeout at some of the big boxes I hear is down to 2019 levels. I haven't substantiated that, but I've heard that. Probably will come back. There's a lot of this COVID stuff involved in it where people are getting back to work and all that. But the one interesting thing I've seen when I went to one of these places and bought a stud on Saturday, they're still charging $7.32 and wholesale wise and it's trading at $3 a piece, right? So there's a big mismatch between both ends. Now, there's less lumber at the end use than there was 2 months ago. Price is telling me that. So that's one thing that's entering that's going to remedy itself. So let's go up to the 12-month FDP, which is the first page that you always pull up. And let's talk about that. What's your thoughts on the 12-month FDP, Matt?
Well, I want to go back and for about a couple of months ago, you said the reason where prices are off is because demand is down, and I'm not sure I completely agree with that because my thoughts about it about back in April and May of this year, when the builders started talking about reeling in that order file, the media and the public was going to mistake that as housing weakness. But nothing's changed fundamentally about the housing market and there's need for new housing and existing housing and multifamily. It's still there. The only difference is just the pace at which builders are calling for lumber is just slower, and when you're asking for 1.7 kind of volume of lumber, and you're only going to build $1.3 million or $1.4 million, then you're just going to get overbought, and that's exactly what happened. The market just got way overbought, and now now we're in a liquidation process. It's doing exactly what we thought it was. The media, the public is taking this for a housing slowdown, and it's not a housing slowdown. It's just a rebalancing of the lumber inventory, and you can tell from we look at sales production ratios, and we'll see on some shipment kind of things about how the inventory is shifting back to the mill. It's in the hands of the mill. We're getting buying on a daily basis, but it's not enough to turn the market around. But I think the big surprise is going to be multifamily, which you see that we're right on top of this week. Number 28 last week was a projected low. And my indications are, my work shows that the market should probably rally into September, which should give us a good July and August, more firm than we normally get. So, and I think that's going to be a combination of multifamily new business and also the return of DIY once vacations get over.
Yeah, no, that's good point, man. I mean, one of the interesting things too is I think what we have noticed is, every few weeks another big producer announcing a new greenfield mill like in the Southeast, right? So
Right. Yeah.
I'm personally, I don't know where the market's going. I've never been, this is the way I've been trained. I'm not a big believer, and things are different this time, that we're going to have a new high or a new average high all the time. I have a hard time believing that, because over my years in the business, it's never ceased to amaze me how quickly supply can react to demand. Now, obviously with the COVID thing and all that, it was a different deal, and it moved quickly, but I think things always like to return to their cost of production. We can argue about where the cost of production is with log costs and so forth, but there's probably a reason why a lot of these mills are getting announced in the Southeast. It's still one of the lowest cost production areas, right?
Exactly. Yeah.
Yeah.
And the Canadian lumber is going to have a higher cost of production, because that cost of logs for particularly Western Canadian mills is a fluctuating thing that tracks 3-month average of lumber prices, and we're just going to be those high lumber prices are getting ready to be in effect of the Canadian mill. So you're going to hear those guys complain about not making any money when their log costs are going to go up from $450 to $650 kind of number, maybe even higher than that. So.
Well, yeah, it's interesting. And then they also followed on the way down too. But one thing I think everybody can say on the wholesale mill side, everybody's coming off a pretty darn good year. I hear some wholesalers tell me normally they have a 3 to 5% margin. They had 10% margins.
On think about that, on $1,000 lumber too.
Yeah. So mills made good money. You see mills buying some of their stocks back. Smart, I think, from that standpoint. But it seems it's a lot of interesting stuff going on. But now we've kind of rolled over, and we may be coming out of the headlines as much as we were before, but who knows? Maybe we're off to the races again. So let's go through a couple of different items. Let's bring up Southern Yellow Pine, which I've noticed they were the first ones to really react and took a lot of business. And I heard a couple people say that when we're talking to pine mills, saying we've had a great years, and we are not going to build an inventory. We're going to find the market. And from what prices are telling me, they're finding the market every day and moving inventory, right? And your chart is a perfect example here. You're really good on the Southern Pine side. What's your thought on Southern Pine? Where are the values at?
I think the entire market is reaching value. We saw last week 2x12s fell off about $300, which is interesting because 2x12 Southern Pine was kind of the go-to replacement for EWP. And now when you see even that item just coming out of favor and falling as hard as it is, everything's quickly coming back into a value range. And there's the reason that Southern Pine's fallen off like it has is the market got severely overbought by the big boxes on the treated side, and all the treaters it kind of ran from the market, and it's about 40 to 50% of the production goes to the wood preserving industry of that side of it. So treaters kind of as a whole, particularly the ones that service the big boxes, are out of inventory. They're in a position they could buy if they wanted to, but the problem is their customers have wood they need to sell as well.
And Matt, I think that's important what you just said there. Well, two things. I think you kind of were talking about this overbuild and treated. Is that the right way to say it? A month and a half ago.
Yeah.
And I think everybody, for people that don't buy a lot of pine, that's a big statistic, and it's true. 50% of the Southern Yellow Pine produced goes to treaters, right? I think it's right around there, right, man? That's a big stat to sink into the melon, right? I mean, so, let's think about that. Now, and like I said, if what we always noticed everywhere I've been at is a lot of times Southern Pine, people up north say we don't use it. Everybody can use it if it's interchangeable at a price. And I think right now Southern Pine, especially when you're talking the replacement for MSR and all that, even though you potentially need new plates and different things, it's at a price right now where people will probably, it moves farther north, right?
It's going all the way to the Great Lakes. I used to talk about the Mason-Dixon line, but now it's going all the way to the Great Lakes.
Yeah. Yeah, and the production, I got to tell you, some of this stuff I see coming out is just, it's unbelievable. The production, drying, dressing, the stuff looks great.
You can't do anything about the nature of the hardness of the wood, but it surely does look, on the whole, it looks better than it ever has before, I think.
Yeah, let's bring up the SPF chart. Obviously, we're in an expiring contract. So that one is really interesting. That that just tried to find some legs last week. People tried to find it. I mean, everybody tried to find the market, and it just kept moving down. There's been some attempts to buy back into that one and build an order file, and sooner or later it could be successful. But that one's a tough one.
The mills had maybe 2 days of what they thought was going to be a reversal, and then just quickly got off of that because everything just started to slow down again. It didn't take very long, so we went from 700 to 750 back to $700 again in a matter of just about 2 days.
This is one I love talking about, the panel market. Let's look at number 4, the fourth one, the OSB chart. So everybody was holding prices. You go into all these boxes, 46.05. I'd go to another one, 46.05, which is, and I looked online last night, 46.05 in Chicago, which is basically $1,439. We traded it for under $1,000 FOB Southeast this week already. It's moving all over. We're having end users sell it. So I think that one was just sticky because there's less producers of it and there's more contract. But from what I see today, sitting here, this minute I'm sitting here, that market rolled over and is taking bids. I think somebody told me mills, if they had volume people coming, they'd look for stuff, but they didn't have any volume people coming looking for stuff as of
volume these days is like 10 trucks.
Well, and it's also hard. I mean, how much do people want to own a historical high, even though maybe it's a good buy, maybe it isn't. But that's just interesting. One thing I noted, the people, remember how we talked, we had the index price, the spot price went a huge premium by $400 or $500. That spot price came in, index stayed, spot dropped well below it. So
and my chart there, really just, we missed this last week, but my chart just really reflects, until this week it's going to be down a little bit harder, but that just reflects that premium coming out and getting back to index prices. It really wasn't anything, but if anything, it shows you how resilient the market is at the top. So the mills can hold it at the top with contract prices not having to sell but 80% or 20% of their production. It's easy to hold those numbers at the top. So I agree with you. I think it's rolled over, and I think we're going to see a couple of multiple $100 declines over the next couple of weeks.
Yes, I mean, strange things can happen. Who knows? Maybe somebody will come in and buy a whole bunch of stuff and get it going, but I don't know. I'm not smart enough to know that, but I do know it's the signs that I see show some the one thing is it is liquid though. People are putting bids on and picking things up, right? So that is interesting. Remember to ask any questions if you have them over in the comments here. Let's go over to the framing package index and talk about builders, what they're looking at. And see how that potentially has changed over the last week. So Matt, there's your framing package index. What can you? What's the highlight of that one? That chart looks like
two things. One is look all the way back to July last year to realize that framing package index was $16 a square foot or $31,000 to build a 2,200 square foot home. It's still almost double that. It's still $27 a square foot, or you look for the bottom line there, 13 and 23. It's still $10 a square foot higher than it was last year this time, but it's also almost $10 lower than it was 2 months ago. So it's really, it's come down about 50%, but it's still almost double what it was a year ago. So it just kind of goes to show you that there's a lot of room for volatility, and this thing could go. A guy asked me this week, how low do you think price could go? And I said, I think 350 is not out of it's definitely on the table after what we've seen. I don't know that we're going to get there this summer, but
yeah,
I think $350 to $400 is historically a profitable trading range for lumber, and there's no reason I don't think that's out of play anymore. I think it's still there.
Here's a question from Kelvin Johnson. Are lumber treaters still treating in the U.S.? ? In Canada, the treaters have enough inventory to supply the rest of the year on the ground already.
I think it depends on what treater you're talking about. If it's a treater for a big box, I don't think they have a lot of inventory because the big box stores have the inventory. For independent treaters or treaters that are selling more independent lumber yards, they tend to have a little more inventory because those yards aren't as overbought as the box store. So I think there's kind of two ways to look at it. So it's yes, they are treating. Some are treating, some are not.
Cool. Thanks for the question, Kelvin. So miscellaneous thoughts. What's your thought going into the next few weeks? One thing that I always think about this time of the year, Matt, from historically when I used to actually trade lumber, this wasn't the time of the year, especially in the Midwest. I wanted to buy a lot of lumber and put it on the ground, right? Just because it's so hot out. Certain stuff I would, but especially if I had it for 3 months beforehand and it's already starting to turn, I really wanted to unload old inventory I had and maybe replace it. Here's a question. Sean Stevens, help me understand why. And Sean, it's all in caps. Hopefully you're not yelling at me. Help me understand why distribution is dumping their dimensional inventory at half their average cost and significantly below mill level offerings. Well, Sean, I don't know what specific numbers you're talking about, nor do I know where people are dumping stuff. I only see where they sell stuff at. I mean, people generally need to turn inventory on a regular basis. They have a mandate to do that, and they go and take the price, whatever it takes to move things. And what they generally do if they're selling it, they're replacing it at a lower cost, right? Or sometimes they're selling it because they have to. But I'd have to know the specifics on it. So, Matt, go ahead.
Well, wholesale distributors turn their inventory quicker, too, than a retail guy. So it's conceivable that wholesale inventories could get turned in 3 weeks or 2 weeks. So they're just what looks to be like a dump number is they might have gotten rid of a lot of their inventory last couple of weeks, and now they're trying to reflect prices of this newer stuff they've got coming. So it's just an averaging down. But as Sean had asked me that question a couple of days ago, and it is kind of perplexing how all of a sudden you just go from you go from $1,700 to $600. It just kind of shakes up the entire marketing process of the entire commodity. So I don't know, Sean, if there's a good answer for that other than just panic selling and thinking they're going to be able to. It could be a cash flow thing. There's a lot of people that are in some serious financial pinches because they've got overpriced inventory and they can buy it for a lot less, and they're unable to buy more because they're already meeting up against their credit lines already. So I talked to some people who they've got excessive inventory because they bought the first $400 off and thought that was a good deal, and then now it's another $400 off.
Yeah, Kirk said, or they can have their inventory hedged. Yeah, some people do. Some people stick to a game plan, Kirk, but what I've seen a lot of people hedulate and have lifted their hedge and put them on and off. And when I look at open interest in the market and the amount of actual softwood lumber that trades in the United States, some people hedge, but just actually look at those numbers of how much open interest there is relative to how much softwood lumber trades, and it's a small amount. Now, more people should, and more people should have a game plan that they stick to. And some people do. In some cases, that is correct, but I don't think that's that in probably the lion's share of the cases, but maybe in some of them. Judy said distributors use average numbers over the year in order to bring market down. They will offer cheap pricing in order to manage the market, or they hope to. Yeah, I mean, everybody has their own plans. I've been on trading floors before where the boss walks in and says, I want to move 5 million feet today, no matter what the price is. And you just have to move it, right? And sometimes that was hedge lumber, sometimes it wasn't. But as
here's a good example of some of that. I just got a call this morning from a guy. His last car, $1,700 FOB mill 2x4 SPF shipped this week. He also bought yesterday a car of July futures for $550 or 500 some odd dollars FOB mill. So $1,200 difference in the same almost 2 week different ship time. But what he's doing is he's averaging his cost down of that $550 car that he bought. He's counting that as inventory he owns because it's going to ship in the next couple of weeks. So he's playing with the numbers. So this might be an answer for Sean's question earlier. It could be that some of your wholesale distributors are averaging cost down on paper before they have the inventory on the yard.
And look, we're in uncharted territory here. Again, I don't envy anybody in that position because it's hard, especially going from $1,700, $1,000, arguably higher in the spot market, to where we're at today in under 2 months. That's just hard to mitigate that. So I think everybody's doing whatever they can to move their inventory, try and decide whether they want to replace it, realizing business is still good and not wanting to run out of lumber. So no matter what happens in this market, people get caught with higher price inventory, but they've had a good year of moving stuff. So it's a good deal.
Yeah, and I think I have a question this morning too. One of the guys that's on listening, I think, and listening now, like, what do you do about your $1,800 OSB that you had bought for the end of July that you bought in May because you thought you weren't going to be able to get any more. I think you just got to stay really sharp on your shipment dates. The way the market's falling off, you don't want to get hung with something that you shouldn't have to be stuck with. But don't be afraid to ask for price adjustments on things that are just really expensive, that were expensive, that are going to be less expensive when you get it. And you gave it on the way up, so ask for it on the way back if you need some help, and just ask for your meals or your suppliers to help you on some pricing if you're really offsides on some stuff.
Miscellaneous thoughts, anything there, Matt? I wanted to throw up the transportation chart to kind of show that one. I like that, and I know Nick was saying here south to north is a little bit harder than north to south lanes right now, but it looks like freight has loosened up on a few things.
Yeah, especially if you look at that. Let me scroll up to a bigger view there. The on the flatbed trucks, the load to truck ratio has peaked out. I think it peaked out at like 116, and it's down to like in the 40s now, which just kind of shows you that there's lumber apparently has an impact on the amount of flatbeds that are being used. We've gone from 20%. That's my grandkids yelling in the background. Sorry about that.
It's all right.
They hit a pool off the beach. But it's gone from 116 over, I think, 8 or 9 weeks. It's more than half. So that it's more than 50%. More than half of it's been cut out of the equation there. There's only, in case if you guys aren't familiar with what the load to truck ratio is, it's the amount of trucks that are available for the amount of loads that are being requested to ship. So, or vice versa. When it was 116, there were 116 loads being offered for every truck available to carry it. Right now, there's 49 loads being offered for every truck available to carry it. And a low end of that, and that number's kind of jacked around because loads get posted double during a day, but the low end of that spectrum is about 20. So we've gone from 116 down to under 50, and it just shows that from a truck perspective, where we were waiting 2 or 3 weeks to get trucks before, that's changing. It should be loosening up a little bit.
Yeah, no, it definitely seems to be. Well, we're getting up against our half an hour here, Matt. I enjoyed the conversation. Matt and I are on every Thursday at noon. Greg and I were on with Matt Beamer yesterday, 12 o'clock Central Time. Have a couple more surprise shows going to launch over the next few weeks. We'll keep you in touch with that. But we want you to come onto the MX Lumber platform and also go to Matt's report, to the Layman Lumber Guide. There's how you get a hold of Matt. There's his phone number below and his email. If you want to get a hold of Materials Exchange, just come over to mxlumber.com. That's mxlumber.com. And you'll be able to sign up, and we'll get you saving money right away. And as Matt said, I think once you get on and learn a new way of buying and selling lumber, now think about this too. Also, as a traditional buyer, you can also be a seller and have liquidity. If you want to buy extra volume to get a better price from somebody and sell some on here, you can do that also. So we can go back both ways into the chain. We set in a new digital market, all the users set the rules on it. We don't have to listen to what the traditional supply chain said. So again, everybody, thank you. Ken Pell, thanks for joining, and we'll look forward to seeing you next week on Lunch with Lumberman.
Thank you, guys. You're right.